Hey, it's Darren here, and very excited to be talking with Marci Bliss, who's an awesome real estate agent, services the entire Wasatch Front. We've known Marci for a very long time, and we've served a lot of clients with her, and we just know she's one of the top agents here in the state. And I've also got Eric Halliday here with Utah Mortgage Pros, who's been one of Utah's most trusted mortgage advisors since 1999. And we are excited today to talk about what's going on in the mortgage and real estate industry. So Marci, I'm going to start with you if that's okay.
Sure.
Why don't you just kind of give us a lay of the land, what's happening in our local real estate market?
Well, so recently, obviously, with the higher interest rates, we have seen a little bit less demand. So houses are staying on the market a little bit longer. And prices are actually starting to drop. Sellers are dropping their prices a little bit after a couple of weeks of seeing not a lot of activity. So things are slowing down a little bit as far as that goes. Demand is still there. We live in an area where there's a housing shortage. So they've slowed down a little bit, not a ton. I just feel like they've normalized. Prices have come down. They're not quite as inflated as they were through the summer. And people have time. They can shop and find the right house rather than feel like they have to throw an offer out on the first one they see. And
you're not competing against offers. You're not competing against 40 offers, huh, Marci?
Exactly. You're not competing against 40 other offers, half of them cash offers the first day that the house hits the market. So there's a little breathing room, which is nice for buyers.
Yeah, it's nice. So when you say house prices have come down a little bit, you're talking about from the peak, which was what, 6 months ago or something like that?
Right. Yeah. From about midsummer, like when those interest rates started to go up and prices, most people felt like were probably severely inflated. So it might seem like, oh, house prices are dropping, but I feel like they're more like normalizing a little bit. Right. Mm-hmm. So, yeah.
And so just for kicks, compare the last 2 years to what we would call a normal real estate market. So do you know what I'm saying? Last 2 years, what was the last 2 years like compared to what it's normally like?
So the last 2 years have been nuts, I guess you could say. I saw a lot of buyers get frustrated and give up trying to win a home just because of the demand was so high and the prices were so inflated with above price offers, cash offers, no contingencies. Especially first time buyers, like regular buyers couldn't compete a lot of the time. And I actually did see buyers get frustrated and just give up and continue to rent. And in a normal market, I feel like, you should have some breathing room. You should be able to consider a house more than once, even maybe see it twice or shop around a little bit. So that's where I feel like it's more normalizing. I don't really feel like the market's dropping or it's losing steam. It's just, I feel like it's normalizing. That's how I feel anyway.
Yeah, makes sense. We had offers coming through our office or contracts. You probably saw this too, Marci, where, say if a house was $500,000, the offer would be for like $550 or $560. It was just way above. And so it just kept pushing prices up and up and up. So we've had an increase in interest rates, as everyone knows, over the last few months that have kind of suppressed that demand. So Eric, why don't we talk about that? What is the lay of the land in the current mortgage space?
Yeah, biggest increase in interest rates that I've ever seen. I've been doing this for about a little less than 25 years, and it's I've never seen anything like it. And I don't know how many people in the industry today have seen anything like it. But that's happened, and it was. I think everybody could acknowledge with COVID coming through, they were really low, like basement low. Who knows? Maybe lower than they should have been. But that's the way it was, and that's part of what spurred so much demand. But the rates, so they had to kind of snap back and go up. They definitely went up faster and more significantly than any of us thought they would in such a short period of time. It is a big change from where it was just 9 months ago or so.
Yeah, and I understand that the government, the federal government and the Fed have played a large role in pushing rates down, and essentially they have pulled themselves out of the market.
Yeah.
And so the market is kind of like ripping the Band-Aid off.
Yeah.
And what I've heard, and Eric, you can confirm this, is that as the markets normalize a little bit, and they're actually anticipating even, not too long, maybe 90 days, maybe 6 months or so, as markets normalize, that the normal players in the big markets will come back in and rates will start to settle back down a little bit. So have you heard anything about that?
Yes. As a matter of fact, with the Band-Aid you were talking about, it sounds like the Fed was buying a lot of mortgage-backed securities, and they were really propping up the market. And they had to they eventually slowed that down and stopped it, is my understanding. But that kept the rates way down there. That provided all this extra demand, which kept the rates down. And that has, with them easing up on that, that's also helped the, and they've also been very concerned with inflation. Inflation has been a big part of the game, and with inflation, that the Fed has increased the rates that they have control over, and the rates that they have control over have sort of an indirect effect on the rates that affect people with mortgages. And so all of that combined has increased the interest rates way up there. There's still, when you and I were doing this for 10, 15 years, we did an analysis of the last 40 years, and we found that the average rate was about 7.5%. So it's not like they're way out of sight. They just snap back in a real way. Yeah. So it's not the end of the world. I don't mean to make light of it. It's not fun when you were thinking you were going to get a 2.5 and you built a home, and then that home got completed, and now your rate is much higher than that, triple that, or at least double to triple that. But it's not like it's out of sight high. It's a little more like the average rate,
historical average. If the lower rates, Marci, I'm going to ask you this: if the lower rates fueled the housing demand and pushed housing prices up, nobody likes higher interest rates, but what are you seeing higher interest rates doing to housing prices?
So housing prices have dropped in the last 2 months, 3 months, however long it's been. Housing prices have dropped pretty significantly at first, right? I feel like they're leveling off a little bit now, but and we're seeing, like I said, and that's in response to the interest rates, right? You have less buyers being able to qualify or to afford the payment, and so there's less of a buyer pool. There's less demand. Houses are staying on the market a few weeks longer, not a ton longer. They're still selling because there is still demand. But we are, like I said, seeing sellers actually drop their price after a week, 2 weeks, 3 weeks, maybe have even, a couple of price drops throughout their sales cycle, which is nice for buyers. It's a nice change for buyers from the last few years, right?
So it's interesting what you're saying here is nobody likes higher interest rates, but it's actually pushing the price of the homes down.
Yes, the price and the demand a little bit. And so like you and I were talking before, like price stays with you forever, right? Whatever price you buy a home at. Financing, depending on the market in the future, is adjustable, right? There you can adjust that in the future. So getting a lower priced home, that's awesome. So if you can qualify, I would say, it's a great time to buy. It's always a great time. And some people say, oh, it's not a good time, but I really think it is a good time if you can find creative ways to qualify and get into that home. It's a great time because you're going to get a better price than you did 6 months ago.
Right on. In fact, it might be better time to purchase, because think about if the rates had stayed low, what the price of the home would be. Price of home, I mean, we'd still be in this frenzy. And so it's possible that if rates drop even 12 months from now, that prices could go right back up again. So we may actually be in a window here in our market where, even though we don't like the higher rates, man, you might be able to get a good price on a home, which, like what you were saying, Marci, I like that. The price of the home sticks with you forever. Finance package, you always have that option to refinance.
Right. And you can find the home that's right for you, right? It is instead of feeling like you have to throw out a ridiculous offer on a home that you kind of like, but it's the only one available where you want to be. And now you've got options.
Yeah, right on. Okay, Eric, real briefly, if you don't mind, maybe just hit some options that you're seeing that some clients are using to buy a home, maybe at a reduced rate or to qualify easier.
Right. And just before that, quick point on that last point of Marci's and yours. It's interesting, and I don't want to speak for the Fed. No one can speak for the Fed except for the Fed, but I think that was their whole point, right? The whole point of increasing interest rates and of changing their strategy, their financial strategy, is to slow and curb inflation. And inflation is not just food and gas, it's also homes. And homes
prices were inflated, weren't they?
Yeah, exactly.
Most people felt like anyways.
Yeah. So that increased rate has sort of dampened the price of the home. And I think Darren's right. I think if I'm a buyer today, I'd rather buy the home today than I would have 3 or 4 months ago, 5 months ago. I mean, in terms of the price. So
yeah, I had a real estate agent say to me, it's been a few months, well, maybe about a year ago. They said, boy, if you don't need to buy a house right now, why bother?
Right.
It was so crazy. Isn't that interesting? I've never heard a real estate agent say that. But you're right, Marci. In the long run, real estate is a very, very good investment. And so what we talk about around our office anyway is the right question may not be, hey, when should I buy a house? The right question might be, hey, well, when do I actually plan on selling this thing? Because that may influence how you structure your loan and the house that you buy. So
that's a great way to look at it, actually.
Right on. Okay, Eric, real quick, just a couple of tricks, if you will, or methods that clients are using right now to afford the house payments and get into a place.
Yeah, we're seeing a lot of sellers who are paying a lot of money to buyers, legally, of course, but they're incentivizing buyers. They're looking for buyers where they were beating buyers away a year ago, right, Marci?
Yep.
They're incentivizing buyers with, large sums of money. So, for example, on a typical conventional loan, a seller can pay, if someone's buying it as their primary residence, the seller can pay up to 3% of the purchase price in the form of closing costs and rate buy down incentives. And so let's say you're selling a home for $500,000. You can pay on a typical Fannie Mae, Freddie Mac conventional loan, you can pay as much, if it's a primary residence, you can pay as much as 3% or $15,000 toward a buyer's closing costs and buy down, rate buy down. And there's a couple different ways you can use that buy down. And this is happening constantly right now. This is not isolated. So you might take some of that money and use it toward a permanent buy down of the interest rate, which is something that you can put that money toward, let's say, get a 0.5% lower in your interest rate, for example, which lowers your payment permanently for the life of the loan. Or you can do a temporary buy down. The temporary buy down, you'll often hear called a 2-1 buy down. There's more variations than just that, but a 2-1 buy down, for example, is for example, your rate is lower the first year by 2%, lower the second year by 1%, and then you have the normal rate the third year. Well, that costs money to do that. You have a payment as if your rates were 2% and 1% lower for a year at a time, which means that in order to do that, there's a chunk of money that has to be paid up front to the lender. And then that money is put in an escrow account to help cover those payments, because the mortgage is actually getting charged at the normal rate, which is, again, 2% higher the first year than what you're actually paying. So that amount of money, the sellers have often come in, builders even have come in and paid that money for the buyer. And so it feels to the buyer like they got a huge discount the first couple of years. And let's say someone's going through a job change where they know they're going to get paid more money, or they're learning on a commission job or something like that, where they expect their income to increase. Perfect for that, because that temporary buy down can really help make a difference those first couple of years. So those are two examples of what people are doing to help sort of mitigate these high rates and high payments, high psychologically compared to what they were a year ago, right?
Right on.
Maybe not.
And it's great that the market is to the point where sellers are willing to provide concessions like that again, because we didn't see that forever. So how awesome that you can go house shopping with the knowledge that you may have a seller be able to buy down your rate for you and lower your payment a little bit.
Yeah, that's a great point. And in fact, Marci, you just had a client that used a couple of techniques to get into a home, right? But maybe we should call her Sarah for the sake of privacy. Why don't you tell us about Sarah?
Yeah, so that great ideas for how to get into a home, right? So Sarah had a family member that was willing to invest in a property with her. So she had a co-signer, which helped her qualify. And also with some down payment. They looked at it as an investment together. She was tired of apartment living, condo living. But she was used to living with roommates, right? But parking is always an issue. Space is always an issue. So she wanted more of a single family home feel. But on the investment side, and in order to afford the payment, they found a property that would allow rooms to be rented, rentable space, right? They looked for a property with rentable space. And so there's a single family home feel, yard. It works great for their situation, and they're earning rental income to help with that payment, and also maybe make some income on top of that. So just some creative ways to get into a home, I think. And it worked out great for her. Young, single, working professional, and living with other young, single, working professionals, but building equity and not having apartment life anymore.
Sign me up.
Yeah. And you guys helped him do that. You helped her qualify and get her loans, and it worked out great.
Yeah, the co-signer idea is a fantastic idea, and it makes a huge difference because the point here was that she may have had a difficult time qualifying on her own because of the higher price.
Yes.
And the co-signer you meld the income together of the borrower and the co-signer, you meld the debts and you meld everything together, and you get new debt ratios, and it can make a huge difference in qualifying. And then of course she had a plan with the renting out, part of the home. So I think it's a great way to go to help mitigate the higher rates, psychologically the higher rates and the higher prices especially for first-time home buyers. It's been a challenge, right? So that's a great example of a good option, a good tool to use.
But I guess Darren or Eric, sorry.
No problem.
Even if you don't have a family member that is like going to help you with down payment money, right? Just having that co-signer helps you be able, if you can make the payment, but for some reason your situation isn't allowing you to qualify for the loan, a co-signer can help you jump that hurdle.
Absolutely. So a co-signer really helps with your debt versus your income ratio. That's a big, big part of getting a co-signer. The down payment, you can find programs that, for example, FHA. FHA is a great program for using a co-signer to help get a home. And it has a minimum down payment of 3.5%, which is lower than a lot of programs. So it can help people who wouldn't normally, and the debt ratios are a little bit higher. Allowances are a little bit higher with FHA. So that's just one example. Conventional does them too. There's quite a few examples, but you don't have to have a cosigner for the down payment money. The cosigner really does help with, if you just feel like your debts and your income are a little possibly out of whack for what a lender might require. Cosigner can really help with that.
Okay, I'm going to ask you a quick question. We're going to wrap up here. But somebody might be watching this and saying, hey, listen, I think the market's going to crash just like it did in 2008. I think it's smart to sit out and wait for a year. What would you say to that client? And Eric, I'll have you go first, and then Marci, take 30 seconds and let's address that.
Well, ultimately, it is up to the person, right? No one can predict the best thing. I always tell my clients, go with your gut feel. You gotta go with your gut. No one else can make a decision for you. It's your life. You need to make the right decision. That being said, there is a period of opportunity here. I do look at a loan as a pair of shoes. You can, like a pair of shoes. It's definitely not permanent. They're not sewn to your skin, right? Shoes you take them off, put a new one on. Same thing with a loan. You don't have to keep it. You don't have to keep it. And there may be an opportunity down the road. So
meaning you can refinance it, not just ignore the payments, but
I'm sorry.
You could always have the chance to refi.
Thank you for clarifying. Yes, you can refinance and pay it off with another product. And so if you feel rates are a little high right now, stick around and let's see what they do in the future. But at least you get in the game of real estate, and there's an opportunity, like Marci has said, there's an opportunity where it's not so uber competitive in a very popular, we're talking about in the state of Utah here, the Wasatch Front, a very high demand. And it's sort of a window of opportunity in some ways right now.
Great, thanks. Marci, what would you say?
Yeah, I would agree. We do live in a state where, even though the housing market has quieted and prices have dropped a little bit, any expert you've listened to over the past while has been shouting to the rooftops that we have a housing shortage, and that hasn't changed. So yes, there's demand is a little less, but the demand is still there. And so nobody can really predict what the market's going to do in the next year. But I agree with Eric. There's an opportunity to find the home that you really want. You can shop around a little bit, find what you want, get into it, and start building that equity. Because waiting a year, who knows, with, if interest rates do fluctuate back down or something else happens in the market that just shoots demand right back up, again, we may see inflated prices again. Who knows? So there's never a bad time to buy. Like Eric says, it has to be right for you and your situation. But if you're thinking about investing in real estate or buying a house, it really is a great opportunity right now. I would say investigate all your options and all your financing and shop around. Let's go house shopping.
Sounds awesome. Okay, Marci, how does somebody get a hold of you for questions, scenarios? What's the best way?
You can call or text me, 801-901-8397. You can also visit marciblissrealestate.com, and that's Marci with an I. And you can email me at marcibliss@hotmail.com.
Okay. Awesome. Perfect. Thanks, Marci. And
Thank
Eric,
you guys.
how does somebody get a hold of you if they want to do a pre-qualification or explore some numbers?
By the way, Marci is an excellent agent. I just want to say that. We've worked with her a bunch of times. She's fantastic. She really
You guys are awesome too. They've helped several of my clients. I mean, many clients through the last few years. We've depended on you guys and not just for helping clients that are actually buying houses. You guys are great to just call I call you guys all the time just to pick your brains about stuff. So
We love
yeah.
it. We love it. For me, just reach out to 801-360-2481. It's my cell phone. You can text me there too. Eric at utahmortgagepro.com. You can go to utahmortgagepro.com as well. We'd love to hear from you.
Well, sounds great. Thanks so much, Marci. Thanks so much,
Thanks,
Eric.
you guys. I really appreciate it.
All right. And we will catch up again soon.